To me, trading is easy. Following the rules is difficult. The problem is people so fear about being wrong.
What's the largest loss you have seen yourself?
Money is just a number to me. I have a Forex account, I lost 90% of it before. You already start with the max risk from the start and you keep adding your risk.
I'm actually buying when it's at discount. Isn't that a valid argument?
Does she make money from trading or from teaching?
Kathlyn, manufacturing and automation engineering, basically IT with AMD and Intel for over 17 years. Founder and also now chief trainer of Beyond Insights for now what, 16 years?
Yes, 16 years. Yeah.
And now experienced and veteran trader and investor for over 30 years. What makes you different?
Yeah, it's interesting when people ask me this question, right? What I can think of very clearly is we have a different approach. Right? Even when I trade and also when I teach people, is we call it SBS. Right? Before I get to where I am today, I attended 11 different trading courses.
Wow, that's a lot.
Yes, a lot. Right? All the way from stocks, options, Forex, futures, CFD. And I realized that I'm still not consistent. So I asked myself, what is the missing ingredient? Then I realized it's a systematic approach. Because this came from my manufacturing experience, right? So in AMD and Intel, how does AMD and Intel able to scale, right? High volume manufacturing? Because I'm in automation, so we know how to automate the process, right? And we have to develop a standard operating procedure for the operator.
The formulas.
The formulas, right? So everyone needs to follow that so that repeated success. And when Intel start a new factory, there's something called copy exactly. Even the layout is the same. Okay, where the toilet is, the path, because everything on the productivity on the floor is already worked out, right? Yep. So I see a lot of benefit from there, and unconsciously, I actually implement in my trading. Like I need to have a step-by-step process for each of the trading styles. And why different trading styles is, the market is not conducive for all trading styles at the same time, right? Sometimes when the market is all-time high, you don't want to invest, right? It's too high.
It's very normal.
Yeah, it's very normal, but it's very stretched, right? But let's say if you are teaching people and you say, ask them to be patient. Do you think people are patient all the time? They are not, right? And sometimes the trend will still continue when the market sentiment is good. Some people are more suitable for long-term investing. Right? They could be patient, or they have higher capital, or they don't have much time.
Yep.
Or some people like to be in the action.
Okay.
Right? So
more active involvement.
Yeah, active, right? Like to the extent of the intraday, right? You buy and sell, you don't keep overnight. If you know 4 trading styles, then you look at the current market, which style is more suitable, and also what match your personality. Right? So in essence, the differentiator will be being systematic. Right? Without systematic, you cannot repeat your success.
That's true.
And need to be flexible on the different approaches. But the most important one of all is to be safe. Yeah. I've gone a long way, a trader for 31 years. I make a lot of mistakes.
Oh, I'm sure
I have wiped out my account before when I did Forex trading. So over the years, I realized how important is the money management and psychology. Right?
Basically, you have done all kinds of financial instruments, if I may. CFD, Forex. Stocks, options, maybe warrants.
Futures and futures options.
Wow, that's a lot.
And after looking at all this, I realized that you don't have to trade everything under the sun, right?
That's true.
And it's more about mastering a few. I wanted to find something that has a higher chance of success. Right? So instead, I find that in, let's say, commodities, right? Even though I've traded commodity futures, is very cyclical, right? Because based on supply demand. When Forex is currency is designed to be stable, right? Most countries don't want the currency to fluctuate too much, right? Although sometimes it trends, but it's designed to be stable. It's not designed like stock to grow over time. And cryptocurrency is also more speculative. It doesn't have a solid fundamentals. So when I look at all this, stock is still the best, right? Because if you buy stock, it's based on, if you buy not just speculative, you look for strong fundamental companies. There are so many great companies out there, like Microsoft, Apple, Amazon. These are not an advocate to buy, right? So you need to learn it properly. So these are very well-run company, and every year they are profitable, right? So the return of equity required, for every dollar invested, they are making more than 20% for these few stocks, right? And they are also growing. So since they are making money, and that means the value of the company will go up if they don't distribute it out, right?
That's true.
And if they continue to keep it, the money will be there, and they are still growing. So that justifies the stock price to go up. Of course, the market will fluctuate, right? But if you can stay on, right? Let's say if they make 20% profit the first year, 20% second year, 20% third year, so that's 60% already. You can afford the market to go down 50% without losing money. Fundamentally, of course, the stock price will go down during crisis, right? So that's the principal concept of why I decided to go for stock market.
So I guess we can say that with experience, only you are able to identify and learn through all these different trends and different behavior of different assets. And
Yes,
I guess
yeah.
this really takes time to really learn all of it.
Yes.
But just bring me through when you first started, I guess, this financial education, training education firm company.
Yeah.
Like, how was it back then? You started in 2008, if I'm not mistaken.
Yes, actually, when I left Intel, it's because I want to have my time freedom, right? So of course, financial freedom is one of them, because I have a decent pay at that time. But the stress is a lot. So even despite my last round pay, after working 17 years of close to 20,000 pay, I thought there's enough money for me to retire if I continue to work for Intel until retirement age. But when I work out my financial plan plus the 6% inflation,
Your projection,
my projection is not enough. That was a wake-up call for me, really. I did my financial plan in three years before I left Intel.
Okay.
So I said, what can I do, right? Since all the while I've been trading, I was trading part-time, I didn't take it seriously.
Okay.
Right? So if I make money, it's good, right? If I don't, not too painful, I still have my pay.
Extra side income.
Yeah, extra side income.
Okay.
When I did my financial plan, I said, I need to take this seriously. And I need to do it in a way that allow me to have the choice to quit my job one day. And I've been managing, retrenchment, MNC, sometimes you have retrenchment.
Yep.
And I was just thinking, would that hit me one day?
You could be on the chopping block
Yeah,
one day.
I know the chopping board. Even though I'm confident with my competency, but there are things beyond my control, right? So I'm looking at that time, Intel is having factories in China. And they're starting up mega factory in Vietnam. 4 times the size of Intel Kulim factory. 4 times.
That's
okay,
huge.
we were actually joking at that time.
Okay.
Because I'm a factory automation, we need to have a roller skate to support the factory. Right? It would be too long to walk.
To walk,
And I was
yeah.
like, how long will Malaysia factory last? That comes to my mind, really. So I'm thinking ahead on, will the jobs in Malaysia last? Will the factory in Malaysia last? Are we more productive than China, than Vietnam? Like, what do you think?
Probably not.
Probably not, right? So even if I want to work until my retirement, would I have a job then? Yeah, so that was in my mind as well. So it was multiple factor, my financial plan, the viability
You are
of working
technically
long term.
20 years ahead already.
Yes, and that's what's happening after, right? Yeah, I'm seeing all this retrenchment. Intel just retrenched 15% of
Yeah,
stuff,
that's
right? So anticipating the future, right? Which is very important for the stock market
That's true,
behavior.
that's true.
And then on top of that, I asked myself, is that what I want to do for the rest of my life as well, right? I wasn't intending to start this company initially. I attended Anthony Robbins program. Yeah, so it was called Date with Destiny. And that's when I found my destiny. Okay.
So you got the awakening.
Yes, I woke up at the beginning. I realized I discovered my mission in life there is to bring out the best in myself and others.
That's
so
great,
that we
that's
can
great.
have a fulfilling future.
Did you started it all by yourself or with your
I
partner?
actually went with my husband, Terence, yeah.
2008, so you
It
both-
was actually, we started the Tony Robbins journey in 2004. We gone through the Firewalk program called Unleash Your Power Within.
Okay.
2005 is when we did Date with Destiny.
Okay.
Both of us had some relationship challenges at that time. I think partly because of my stress in Intel. I wasn't the most patient wife, I would say. With a lot of stress, it's not easy
You
to...
are multitasking, there's a lot of things to ask for.
So, and at the time I was thinking, how can we resolve this, right? Yeah. So a friend who was recommending this seminar, I said, went for the preview. I said, why don't we give it a try? It was an expensive program to me at the time, 14,888 per person, right? So, yeah.
Back
So
then.
ultimately, I asked myself, what is more important than your relationship, your happiness, right?
That's
yeah.
true.
So I'm glad I asked the right question, and I went, and it transformed my life, and that's when I realized that's what I want to do, right? But I cannot quit my job and do that because I realized the trainers there are volunteer, okay, which inspire me. Then what can I do so that I can have time? So I max out all my annual leave crewing in those events, voluntary crew, okay? So I no more leave already, but that's my passion. So after that, I realized that, okay, why not I take my trading seriously? After I left Intel, I thought I have my time freedom and I can do what I like to do, my trading.
Manage your own schedule.
But 2-3 months down the road, I start to feel lonely actually, because I'm the type who like to connect with people.
So trading is more like at home.
Yeah, because in
computer.
Intel, right, I have a lot of colleagues to talk to,
That's
right?
true.
So when I'm at home, and my husband at the time was still working for 2 years with JobStreet, right?
Okay.
He's a product manager there. That's when I start to, what can I do? So I started to help my, at that time, my Forex guru part-time to be a coach. And then I realized, okay, that's what I like to do. I like to teach and share. Yeah, so, and after that, he moved back to Singapore. Then I asked him, okay, so I like to teach as well. So, is that okay? I don't want to compete with him. He said, well, so I said, I want to teach options. Right? Then I said, yeah, go ahead. So
Okay.
he says he's going to focus on Forex, okay? So I can teach options because that's what I trade a lot at the time. So then, okay, I started. Then I realized, okay, there's too many gurus in the market, but the most lacking one is trading psychology. because that's what I struggle with. After attending many courses, trading many strategies, I'm still not consistent. Right? It's because of the need to systemize. The second part is about psychology and money management. So that's what I want to teach. Yeah, I want to help people to get it right. Yeah.
Tell me more about that, right?
Yeah.
Because when people think of trading, it's about money, it's about managing your trade positions and different technical analysis and indicators and stuff, right? But how much do you think of an importance psychology is when it comes to trading?
I would say 90%.
Oh wow.
Yes.
I thought it's
a lot of people
50-50.
thought it's lower. I think it's 90%. I read a lot of trading psychology books and also the interview with top traders. What actually changed my perspective is when I read the interview with top traders, and all of them are consistently. They said actually once you learn the strategy and you practice the strategy, in fact one of them says it's 100% psychology after that. It's not that the strategy is not important.
Fair enough.
But can you stick to the strategy? Right? We have been teaching 7,000 students. I can guarantee you not everyone will execute the same way.
Of course.
Right? I mean, I just teach a recent class last week. Right? In the morning we teach them, let's say do not put round number. So right in the afternoon people do that. They justify it because they're conditioned with the old belief, right? We say put a stop loss. Do you think a lot of people put stop loss? They won't. People don't follow what you teach them. Right? They don't trade what you teach them. They trade what they believe.
What they feel
what
in the
they
moment,
feel.
the emotions,
what they feel
right?
at the moment, and what they believe is what they're conditioned since young. Yeah, so it's because people have a need to be right. There's no way to be 100% right in trading, no matter who you learn from. Why? There's how many traders do you think are there in the market?
Oh, should be tons.
Yeah, millions and millions. Right?
Everyone is competing.
Do you think that these millions of traders will make the same decision?
Of course not.
No, right? Some are long-term investor, some are value investor, some are growth investor, some are short-term trader, and some are called scalper. They just make in the minutes and they get up, right? Just a few spike and they get up. And then you have the auto trading as well, right? So all these create noise in the market. So that's why no matter what you do, you cannot be like God, right? Predict what's going to happen in the future. But a lot of people are emotionally attached to that. So, but professional traders trade based on an overall basket of outcome because we know that there's no way to be 100% right. Yeah, we work based on the age, right? Do you have an age in a strategy? We based on probability. In 100 trades, in a short-term trade, 100 trades, if you have a reward always of 2 to 2, when you look at the chart, it has a potential to go up at least 2 times compared to your risk. Then 1 win cover 2 losses. 1/3 right, you break even. Like 1/3 is 33.33%. That means even 40% right, you can start making money. 50% right, you start make more money. 60% right, you make great money, right? So in that case, you don't need to be right all the time.
Okay. Like how often do I have to be right? Like of say 10 trades, right? What's a good win rate for me? Let's say a starter. What would be a good win rate? Is it like as long as I win like more than 5 times, it's fine?
Actually, 4 times is already good enough.
Okay.
Yeah. But a lot of people may not believe it, right? Because if they have not traded long enough, right, they may not understand the market noise. So if you factor in the good years and the choppy years, as a beginner, you get 40% right, you need to celebrate. 50% right is where you want to march for if you are doing short term. If you are doing a trend trading, actually you can even tolerate lower success rate. Yeah, because we have a trend trading strategy where when you enter into the trend, right, once you enter, if the trend goes in your way, you move up your stop loss, then you add positions. You move up stop loss, add position. Any one time you expose 1% risk.
Very similar to DCA actually.
Yeah, but DCA is different. I am a strong believer on don't average down. Yeah. So it's a different concept altogether, right? When you add on the way up, right? When the stock move up, you move your stop loss up. Your previous trade has 0 risk, no more risk unless it gaps down. Okay, no more risk. Then only you add a additional position.
Okay.
And that position is the new 1% risk. Of your capital.
Right.
So you are adding position, even though you keep adding position, your exposure is 1% with the exposure exception of big gapping. Yeah. But when you average down, first, like when the stock is coming down, are you losing money or making money?
Yeah, losing money.
Losing money.
But in hope of buying it cheap.
Yeah, okay, so it's already losing money, right, your account. Right, a lot of people expose more than 1% of their capital. Right, imagine that you originally exposed 1% risk. Right? So if it keep going down, you add position. Okay, so now your first one is already negative. So from 1%, it dropped to become 2% risk for the first position. Now you have a new position, let's say lose around 1%. And if you keep adding on the way down, the first position is also still losing, losing more. Let's look at the impact for the account. This is a very risky way of trading. Yeah, especially the trend is down. So we said when the trend is down, we never add at all.
So this is in the context of trading, but when it comes to investing, it's totally different, right?
Okay, I still don't agree with investing doing this way.
Okay,
yeah,
fine.
But I have a modified way of dollar cost averaging.
Okay.
Modified way means as long as the trend is down, you don't add.
Okay.
Okay, until it settles down first. Yeah, because you don't want to catch the walling knife. Because I've seen very adverse scenario, right? Over my 31 years of trading, I've seen the 90 start with the Asian financial crisis, where some stock could be 70% down. Even the most so-called safe unit trust in Malaysia. Don't call it blue chip one. Unit trust in Malaysia.
Okay.
Savings fund, right? Dividend fund, which they consider drop 50%. Savings fund, 50%, right? So that's a lot. And so imagine you keep adding. And depending on whether you trade on margin, you will get a margin call as well. The problem is the psychological part impact as well. Like let me put it in context first. You never know where is the bottom, right?
Of course.
Yeah, and if you keep adding, something is not right. No matter how strong the fundamentals, the biggest part that people miss out is this. Like earlier you said, what makes us different? The biggest difference is, I realized over the years, is what actually moves stock price. 40% is based on the macro. Macro is the overall biggest sentiment, like the interest rate hike, money supply. Those are macro. Geopolitical tension, those are macro. Then 30% is based on the industry trend. Only 30% is stock specific. So the big move already covers 70%. So if you hang on to the stock because of the fundamental is good, you're missing out on the big picture. I always ask myself that to remind myself, it's so good, why is it going down? That means the big funds are not thinking the same way. They know that no matter how great a company is, when the macro environment is not good, it will still go down. You need to get out. Right? So to me, I screen stock based on strong fundamentals. I get in and out based on technical.
So you would only add in when there is, if I may,
when the trend is in
when there's
favor.
a reversal trend?
Yes, when the reversal, it has to settle down. As long as it's downtrend, never add.
I see.
Never add, yeah.
Okay.
Unless at least it has to settle down.
All right.
And you need to have a threshold on how much you add. Okay. In the unit trust industry, it's called dollar cost averaging. Right? Dollar cost averaging means, let's say you allocate 10,000 for investment in this unit trust. You divide by 12 months, right? So every month you put in, because for a lot of people who invest in unit trust, they don't know how to look at the stock chart. Right? So that's the sort of the best way for people, right? You put fixed amount, but it is fixed amount. You take 10,000, so when it's cheaper, you end up buying more, right? More units. But the way people implement wrongly is, instead of the dollar cost averaging, there is a fixed amount already for the whole year. But when they buy a stock, when they go down, they keep adding, right? They don't have an original amount, right? So let's say you're able to buy $400, okay, of these stocks, right? Yeah, and you only bought 100 initially when they go down. And you add, they're not so bad. But the problem is people already bought the 400. When they go down, they add some more. When they go down, they add some more. Right? That's the wrong concept of dollar cost averaging. Yeah, you already start with the max risk from the start, and you keep adding your risk.
My counter argument is, the way we look at stock market, it moves with economy, and over time economy inflates and it grows, asset prices will increase. So if I just dollar cost average down, yes, in short term, I do see the red colors, the downsides, the fluctuations, right? Over the long time, I'm actually buying when it's at discount. Isn't that a valid argument?
So the question is, how many times will you do that? Let's say it goes down and down and down and down, right? What is your threshold, right? Is there a limit?
So you're saying that while DCA is valid, portfolio management is also a huge point.
Yeah, first you need to start with the portfolio management, right? Your maximum exposure. To what extent are you going to add?
So
like let's say you find that this stock is great. The valuation is very good right now. And there's two levels of support. You can say, okay, I buy half at the first support. In case it comes to the stronger support, I buy another half. And then you stop that. It's fine. Right? But you cannot be, okay, go down further, buy some more. Go down further, buy some more. Go down further, buy some more. Because one of the most important reasons why people do that is people like to buy cheap. Right? And the concept of bargaining, right? And people don't like to buy expensive. When you add on the way up, does it make sense? You're buying more and more expensive.
Very complex.
But a lot of growth investor, that's the way. I've read a lot of trend trader, growth investor, they never buy on the way down. It's like a no-no. Because the concept of risk management is you need to limit your risk. By every jump, you are adding your risk. And a lot of people now, they don't use, because they don't pay full. Right? They don't have the holding power. If you trade on margin, the moment you add, you will hit margin call. You're already out from the position. You don't even have a chance to come back. And the part is some stock never come back. We don't take for granted. Do you think a lot of people know when you can do it? No. The moment you do it on one, right, you do it on a lot.
Wouldn't that be tied to back the point to a psychology point where when the market is good, only I start buying, then it's also quite counterintuitive, right? When things are start going up and I see reversal, the people are getting happier, more willing to invest, put more money into the market, then only I start buying. Isn't that counterintuitive? I'm trying to buy the highs already.
No, that's why people need to first understand their trading style first, right? A lot of times, people cannot be consistent because they are not clear what they're doing. They just know I want to buy stock to make money, but they're not clear what strategy they're using, right? So as I mentioned, right, there's long-term investing, then mid-term trend trading, shorter term like 1 to 2 weeks is called swing, then you have intraday. Within intraday, you also have scalping, like in the 5 minutes you get out type, compared to the 1-2 hours. And within long-term investing, there are also a few styles, right? The more popular is two, value investing, and growth investing. So people need to understand which one they are using because it's different. Value investing, you wait for depressed value to buy. That means the market is at a discount, right? Then you start to accumulate, but you need to have a threshold, right? So let's say out of your basket or your portfolio of 10,000, how much will you allocate to these stocks? And you also need to monitor to make sure the fundamentals are still intact, right? So that's very different from growth investing. A lot of people will not be able to wait until the crisis to buy. Do you agree?
Of course.
And there will be years without crisis. And once you buy at a higher level, that means you're not buying at depressed price. If you go lower and lower and lower, if you add to it, that means you are overexposed as well. There's another aspect which is called growth investing, which is what I implement. Growth investing, you go for growth stock. What are growth stocks? Like Microsoft, Nvidia, AMD, these are all growth stocks.
So it can be mega cap as well?
Can be mega cap. These are growth stocks. Growth stocks, there are two terminals. Some people confuse with emerging stock. Emerging stock are the company that has not made money yet. Right?
The unprofitable, like Palantir back then.
They may make money in the future, just like Amazon long time ago, right? So those are different. So if you are looking at growth stock, it will be in the category of like Microsoft. They're already profitable, but they're still growing more than 10% year on year. So when you're buying at a reasonable price, when there's another crisis coming out, they can go down a lot. Unless you're buying Microsoft at depressed price, okay, then it's different.
But it's very hard to find such companies at depressed price, especially Microsoft. Right.
So if you're looking at growth investing and you don't have a chance to always start your trading journey when the market is at a crash. And when it's crashing, you also don't dare to buy. That's the psychology, right? So when it starts to trend, you need to have a way to know that it's not overpriced, right? Then you follow a technical chart. Because you're not paying a depressed price, right? When the market sentiment change, it can go wrong as well, right? So you want to have a stop loss. So to me, a lot of people doesn't like stop loss because they feel that I get kicked out of the market. But it's a great company. Then later I need to re-enter. So that's the concept. They need to understand the whole rationale behind this first, right? If they wanted to be more hands-off, right, then they probably need to follow a Warren Buffett style already. Conservative company.
Value investing, and
you need to be very, very patient. Okay? But what I see a lot of people make the mistake is they implement halfway. They don't follow exactly. They are not buying at a depressed level, and then they don't have stop loss.
And emotions get
in
the
then
equation.
The stock no longer has a good competitive advantage. They still hold like top glove, right? Like Hata Lega. China already have new factories producing cheaper glove. And they still hold on to it. So that's where the psychology come in. Right? Why do they hold on to it? First, people listen to tips and buy. They say hot stock, they buy. Have they really studied the company? I would say majority no. Because I asked a few, why are you still holding to the... They asked me, what do I do with a top group stock? Then I said, why do you buy in the first place? And what's the reason you still...
They say can buy, ma.
They say can buy. What makes you still hold on to it? Now already lose so much. Then I asked them, do you think this company still have chance to compete with China Glove? Then I said, likely no. Then do you think you should still hold on to it? No. Then the next one, so what do you think you should do? The most common response I get, but I already lose so much, how to cut? People cannot cut. Because cut, what do you think cut means?
Realizing your losses. It's your hard-earned money.
But psychology is very important.
Admitting you're wrong as well.
Admitting I'm wrong. Second one is buying the stock, the investment is a hope to a lot of people. A hope for their financial future. Cutting means subconsciously no more hope. That's why it's so hard.
If I can say that it's actually quite easy for people to lose money in trading as well. And as an investor in the market, I'm in a way media try to tell us, with research and stuff as well, that it's very easy to lose money with trading. In fact, I guess a report by CNBC said that over 90% of professional traders lose their money. So like in your opinion or in your experience, out of 100 students, how many are actually profitable?
Well, they don't report to us, right? They don't
Of
report to
course.
us, yeah. So I would say if you look at the general market statistics, right? I do research on statistics. This is not what people like to hear.
Yeah.
It will
Very
be
painful.
around 5%, depending on what you trade.
Very painful.
Forex could be 1%, but depend on how you look at it, right? So if I share this statistic, the common two perspective of looking at it. First is, wow, success rate so slow, right? So low. Why should I go into trading? Right?
Right.
So there's another perspective that I share with our students. If 95% lose money, who do
Yep.
they lose to?
Another buyer, another trader.
They lose to the 5%.
Yeah.
So would this 5% make a lot of money?
Of course.
Yeah. So instead of saying, wow, the success is so slow, right? So why do I want to learn trading? It should be, how can I be in the 5%? The question is, why are so many people in the 95%, right?
Yep.
So what do you think?
Well, lack of knowledge, emotions, not knowing what's the right thing to do, and also, right, to be fair to their defense, right, they are also probably competing with professional firms, with Bloomberg Terminal, with all the insider information. So those are the 5%.
No, even fund
Don't
trader
think so?
can lose money.
Okay.
So a big part of it is, the first one is, a lot of people don't attend a class. Okay, they just figure out their own way. How do I know? In Malaysia, right, there are 3 million CDS account holder. Guess how many percent are active?
Probably less than 10.
About 180,000, that's what I understand.
Okay.
Yeah.
Less
so,
than 10, no?
yeah, and I look at all the people who attend classes, right? I add up, we have 7,000 students, right? But we cover global market. Yeah. So I add up other providers. The amount is still very small. That means majority of people probably don't attend the class.
Self-taught.
Yeah, self-taught, right? And I understand that majority of Malaysia traders don't have a stop loss. And mainly because there's no stop loss feature for many years in Malaysia broker, right? So they are not used to money management.
Yep.
And the concept is people want to be right. So they have the wrong understanding of trading. In trading, yeah, it's okay to have a loss.
Yep.
You can lose even a lot of times. It's overall in 100 trades, do you make money? It's a reward always with a probability of success. So loss is part and parcel of trading. So to understand how to win this game, right? First, people need to understand that you need to systematically follow the rules. But do you think many people can follow the rules?
Very hard.
No. Most people like to trade what they are used to. Most people like to be impromptu trader. I've seen a lot of forex traders like, wow, this looks good, right?
Yeah.
Then they buy. They don't have a trading plan, right? 90% of people don't trade with a plan. If I just ask you, how many percent of people have a financial plan?
Oh, very less.
I ask this consistently in many of my seminar. Like I used to speak in NAC, right? 4,000 people. And I
Yep.
used to do a lot of previous time. Usually it's about 200 each batch, the smaller one. I was also amazed myself during the early days when I asked this question, how many of you have a financial plan? Or at least work out, you know how much money you need for your regular expenses plus some buffer.
Yep.
1 to 2% of the room. It's very sad. So that come back to most people don't like to plan.
Yep.
And it's not a habit. Most people don't do post-mortem. I work in Intel and AMD. We have project post-mortem. So you review your trades, right? Then you think what go right, what go wrong. We have so many students, so we know not everyone wants to review back their trades. They don't want to look at it if it's a loss. Okay? Because they know they break rules, and I just want to look at it. And because of this, 90% will not cut it. Not because they cannot be a great trader, but it's not that the trading is difficult. To me, trading is easy.
Yeah.
Following the rules is difficult.
I see.
Why? Because people don't like to cut loss, right? They just don't like to admit. But cutting loss is part and parcel of a trader's profession, okay?
That's true.
Yeah, it's like when in a business, would you have expenses, right? You have. Do you
course.
cut at a loss?
No?
So if you say that I don't want to have expenses, I only want to have revenue, it doesn't work in a business.
Of course.
Same, in trading, some part of the losses is actually an expense of your trading business.
So I'm sure in your 31 years of experience, I'm sure you have suffered losses yourself.
Yeah,
so
definitely.
like at your start, maybe like, wow, if
I'm
may
definitely
ask,
in the
like,
90+% when I started. That's why I read a lot of psychology books. And the first course I conduct is trading psychology.
Okay.
Because I know that's the biggest differentiator of my transition.
So just something for the audience, right? What's the largest loss you have seen yourself, like in the range or a figure?
I have a Forex account, I lost 90% of it before.
Wow, that must be very painful.
Yeah, pain. The pain is not so much of the money.
Not
It's
money?
the part that I know that that's something I shouldn't do, and I still do it. I always want to be a role model. It hurts when I cannot be one. Yeah, and that's something that keeps me on track as a trainer. I want to be a great role model. I find that everyone needs to have something that keep you in check.
Yep.
Because when you work for people, right?
Right.
Who manage your performance?
Your boss?
But when you're trading, who is your manager?
You're on your own.
You're on your own. So I always ask my student, are you a good manager for yourself? Most people are employees. So I actually consider myself fortunate to be a manager. Because as a manager, you need to be tough, right? Managing performance is not easy. But can people manage their own performance? Can people be honest, right? Let's say I'm a manager, right? I always have to give the tough message. But are you going to do that to yourself? But I find that most people avoid their mistake. I would say 90% of people, they know they break rules. But they don't want to go back and admit that they break rules.
What was the specific rule that you've broken for your Forex account to have lost 90% of its value?
I would say that there is overtrading. The biggest, because Forex is high leverage. Yeah, you only need to pay 1% of the contract price to trade. That's why I don't encourage any new trader to go into Forex or cryptocurrency, because the temptation is too high. Temptation is too high. Fortunately, I start with small account that time. After that, I don't do that anymore. Yeah, I would say that I make mistakes a couple of times. It's painful. You know what you should not do, then you still do it. Yeah, it's a few $1,000 account, but it's a percentage that matters. But why I think psychology is important is, I think a lot of people know that they shouldn't do that, but they cannot help themselves from doing it.
Right.
Yeah. So my most passionate course is actually our Master Trader Bootcamp. Yeah. I realized I started that with 1 day. I call it Trading for Success. I felt 1 day cannot change people. Okay. Then we got 2 days, 3 days, 4 days. So now we come 5 days. 5 days bootcamp, and they have to be offsite. Right. I had to put them into the situation where they're engrossed and they need to start to open up themselves for the change, and I use some subconscious programming. But you see, most people don't go through such a course, right? They learn some trading strategy and they thought it's okay. And that's why I don't believe if we just teach strategy, they will make it. One most important thing is they have to believe the strategy. But they have a lot of other beliefs that you need to break. Let's say I said don't put stop loss. To what extent do you believe that putting a stop loss is a must? So I give them 0 to 100%, right? Yeah, there's still a lot of people put low, 10 to 20%. That means they don't buy in. And I said, I want them to be honest. Because if they don't buy internally, do you think they will follow?
Of course not.
So I know that telling doesn't work. So for me to help the student is,
gauge them
what can I do to help them change this belief? If they come for the psychology course, I can help them. If they don't, then I can just remind. I cannot be a nagger all the time.
What if there's a 9 to 6 employee watching this video, doesn't want to attend a course, wants to self-learn? Well, obviously, possible or not, it's up to them, right? But like on average, what kind of first year should I expect as a super beginner trader, DIY myself?
I would say it has a lot to do with the personality.
Okay.
I also have students who can be disciplined from the start, although it's rare. So the first few months, they can be making money already. I would say consistent. I think you can even make money in your first few trades, right? Yeah, some call it the beginner's luck. If you follow rules, so happen after you learn it's a good market. There are people who learn it happen to be choppy market. Right? Then they get discouraged. But it's part and parcel of the market. So on our psychology course, we actually share with them, first you need to embrace the reality of trading. It's just like in any profession. People think that 5 to 10% of success in any profession, let's say. Does it mean that you should not be that? Yeah. So it's about whether the reward over the risk makes sense, right? So that's the nature of trend trading as well, right? You may not have the market trend every year, but when it trend, you make great money. So you cannot use up all your money because you make a great money in 1 month. But this is not what a lot of people are used to. They're used to get a fixed pay, right? So when it comes to being a full-time trader, the transition is big.
Yes.
Yeah. So you need to have a buffer, right? And you have the confidence. So knowing that you can be even 40% right and make money. Because in trend trading, we are looking for minimum 3 to 1 reward risk. When you enter a trend, it has to be at least 3 to 1. 1 win, cover 3 losses. You can be only 1/4 right and break even. 30% right, you can still make money. And George Soros has a lot of strategy that's only 1/3 right. He's a trend trader. 1/3 right, but he makes huge money because he knows how to cut loss. It's not the usual way people think. People used to think, I follow the rules 1, 2, 3, 4, it has to be winning trade. People used to be emotionally attached to trade by trade. You know? Like this is win, happy, loss, feel sad. People are not used to trading as a basket like professional trader. Okay, when it's a loss, it's one of the statistics.
It's their money right now.
If someone wants to be in the 5%, this is what they need to think. If you want to be a trader, out of 100 trades, you will know that even though half right, you can make money. 40% right, you can make. If you're half right with the choppy market, you consider very good already. If you're intraday trader, you get 70% right, you're already top 1% in the world. We have at least 2 of our coaches like that, okay? Growing from the account size of 3,005 to more than $1 million, okay, US dollar. Yeah, but they are disciplined. They are willing to do paper trades.
Actually, I want to ask a question on that. I believe a lot of people have this idea of, I should start trading because I got like $10,000 right now. Is it possible to make 10,000 into $1 million? Like realistically, is it possible?
Yes, it is possible.
It's possible?
Yes.
Like
I mean,
what's the percentage of?
I have coaches who done it. Yeah.
Do you have to be in a very prime condition with people guiding you, with accountability partner telling you not to do this, and you have to be so experienced? Like, is it possible for like newbies DIY learning from YouTube, like $10,000 to 1 million?
I would say it's harder. Easier, you can make money by breaking rules. You can lose money by following rules. Ultimately, it's like how long you can last, right? If you are taking too much risk to make the 1 million, one day you will give it back. Can you be consistently making that from 10,000 to 1 million and keep it?
So is there a good starting capital for a beginner? How much is a good amount? Because understandably, I'm gonna make some losses, blow some accounts, right? That's the term that they like to use.
That's why we have paper trading. Yeah, most people cannot do paper trade.
But it's different though. It's
So I have a student who is pretty innovative. Like he told me that he buy 1 unit. At least it's still live. He said, I cannot do paper trade. It doesn't feel anything. So I buy 1 unit. At least I know that 1 unit is a live trade. Okay, but it doesn't make sense from a commission standpoint. So okay, but it works for him. It's fine, right? It's live, and if you lose, you don't lose much, but you still have the lessons. No matter how small the account size, right? Currently you have fractional shares. It's not like our time where there's no fractional shares, so you have to have minimum account size. Now even like 500, you can trade because it's fractional shares. I would say it make it more viable, and I would suggest all people to start with paper trading, get used to the paper. So I just don't want to scare a lot of people, right? Even though I said like what you said, statistically for trading, I'm not talking about investing. Investing success is higher, but it doesn't mean that it's that high as well, because a lot of people don't follow rules too. But trading, because it's more emotional. I think the most important question I want to ask people is, do you want to be in the 5%, right? It's not that difficult to be in the 5% if they can be disciplined. They're willing to follow the rules. The rules actually to me is very simple. The difficult part is people are not willing to embrace the randomness of outcome. That's where the psychology comes in. So they have to learn how to detach the emotional aspect, just like a professional trader. And you need to treat trading as a statistic. This is just one of the stats. In trading, you can make 50% success rate, and you can make great money already. Because 1 win cover 2 losses. But can you deal with 50 losses? That's the question. Right? So when the loss comes in, theoretically when I share with them, they say, oh yeah, can. 50% loss can make money. Trading is easy, right? So but when it comes to first trade, this 50 losing trade, do you agree that can come in any sequence?
Of course.
It doesn't mean win, loss, win, loss, win, loss, win, loss, right? Then 2 to 1 you will still make money, right? But it may be win, 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 loss, or loss, 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 win. But let's look at the psychology of a new trader. First trade, loss. Do you think it will hurt them a bit?
Of course.
But I follow everything. Second trade, loss. Then start to doubt, right? Third trade also lost. I'm not sure whether Beyond Insights did the right thing. Or Kathlyn really, does she make money from trading or from teaching? I know all this can go to people's mind.
Of course.
And that's the reason why I show my statement, okay? Because the moment they think about it, they will not follow the rules. So can they detach themselves from the individual trades?
So your coaches will be teaching them in the classes, showing them like things to be used, things not to be used. Like what are the tools you guys use actually? Excel or what kind of software? Or
teachers need to use some fundamental website to shortlist the stock. I'm a strong believer on trading strong fundamental stock. We shortlist strong fundamental stock first, and it just take 5 minutes. They just key in our criteria, the output will come in. After that, it's how to analyze the performance, right? The next one is we time it using the stock chart. So they just need to get familiar with the charting software. We use TradingView.
But you can't buy stocks on TradingView?
I use interactive brokers. But the student is free to use any broker. Just like we cannot teach too many brokers in tutorial, right? So in the tutorial, we use interactive brokers for now.
But that would be interesting to hear that, because I'm an advocate for interactive brokers, but for all things, let's say stock investment. But now on your counter end, right, in terms of trading, like why interactive brokers? Amongst all platforms out there.
I started using interactive brokers since 2005 when I started to take my trading seriously. And I like the platform. I like flexibility, power. I would say I'm a power user in a way. And also because I come from a technology background, I like to have the flexibility. It's very configurable. It has a lot of advanced feature. So before I log off, I always look at my total portfolio risk exposure. So it can tell me if S&P 500 overall market sway positive 5% to negative, what is my worst case scenario? I look at it every time before I leave, so I know, did I miss out anything? Do I have overexposure in any of my stocks? That's what I like about it.
It's cheap, has a lot of products you can use.
It's one of the cheapest platforms.
So remember to use the link below.
I would say if you compare comprehensive features,
Yep.
it's probably too much feature for beginner. But doesn't mean you cannot use it. You just use what you need.
Yeah.
Okay? You just learn the whatever you need, then it's simple. Yeah.
So as an audience watching this video, right, I've known like losses that I'm potentially gonna lose. I've read enough about indicators, things that I should and should not do already.
Okay.
I know which platform to use. Right, I'm ready to dive head on into the stock market and start trading, maybe make a few hundreds or lose some few hundreds, right?
Okay.
But based on your experience and your opinion today after so many years, right, who should and should not trade stock?
Interesting question. When I first started, I thought that if I teach them and they follow, then they will be able to make money.
Yep.
But I realized that there's just people who don't like to follow the rules. Yeah. So if they cannot follow rules, they're not suitable. Or there are also people who are not tech savvy, right? They struggle with platforms. You don't need to be very tech savvy to be platform. At least you learn how to use the browser or the mobile phone, be able to enter the bracket order. Not too much hand holding required. Although we provide hand holding, but we do see over the years, there are some students really struggle, right? After you teach them, actually the next day they will forget how to enter a bracket order. I mean the stop loss profit target. Yeah. So then they will not be suitable. I would say that it's okay to be slow.
Yep.
If you're slow, you just need to recognize them, and you don't have to compete with other people, and you choose the style that you can manage, right? People who cannot deal with simplicity, you just do swing trading.
What are some of the simpler ones for people to start with? Let's
Usually it's swing trading.
Swing trading, like
right?
2 weeks like that.
You look at it like like a support resistance range, right? Look at what is the trend.
Okay.
Yeah,
That's
you just have to deal with the ambiguity. You cannot win every trade. You have to still look at the random outcome. So as long as you can embrace then trading is easy. So usually it's the psychology. The people always have a need to be right. You overcome that, actually, to me, trading can be easy. Yeah, so you don't have to start with losing a lot of money, because we have a strict money management. Maximum risk per trade is 1% of your capital.
Oh,
right? Yeah.
Okay.
So let's say a person with 10,000, 1% at 100. You find it still painful, you change it to 0.5%. Your trade size should be a mosquito bite. Not to be not painful at all, then you don't treat it seriously. Too painful, then you're trading too much already. You adjust the risk per unit, right? So we don't have more than 5 concurrent trades overnight.
Yeah.
Right. So if you're 1% risk, then maximum 5% risk to your account. Actually, in this way, trading is safe. Although we talk about the risk of trading is when people don't follow the rules. We just have to recognize that, you cannot win all the time. But you just need to win more than 1/3 in a swing, more than 1/4 in a trend, then you'll be fine. So trading is not that difficult. The problem is people so fear about being wrong. You get 2 right out of 5, you make money already. So that's why I say it's 90% psychology, because people just get a lot of wrong concept about investment and trading. The thing is, most people will take a while to discipline themselves, like to recognize, and later on, I think I should have followed what Kathlyn said.
Yeah.
Initially, they may not. Sometimes it's bang the wall first. Now I understand why. Or they may take for granted, overtrade. I like interactive brokers because it doesn't give too much leverage. Like if you buy CFD only, it's 33%. You cannot enter too many.
Yep.
Right? It's a very conservative broker. So, which is to me safe for students. I have this belief that because not many people can control themselves.
Yep.
So it's better to have the system to control them. So don't go for a broker that give you too big leverage. So the broker will always tell you you're trading too much. Right? So then at least it holds you back from having a big losses. So if you use broker that doesn't high leverage, actually your drawdown will not be so big. Because even if you are tempted, you cannot trade too much. If you are the type who has a lot of gambling nature, then I would say don't go for short-term trading. But you can still go for long-term investing. If you think you can control yourself, probably after you have to test yourself out, like some people you don't know. Nobody by nature are disciplined. I mean, even for myself.
That's true.
That's why I go through a lot of psychology course and bang some wall. Then I realize, I must be disciplined. You must have something that holds you back from breaking the rules. So if people don't have that, and by nature they are greedy, cannot have self-control, then I would suggest they don't go into trading.
That perfectly summarizes it. That's very valuable advice and insights from an expert trader. Where can the followers follow you?
They can go to our website, beyondinsights.net, and subscribe to our channel. Actually, on a weekly basis, if they click on the top right, they can click on the free webinar. I have a 3-hour webinar to educate the public on how to have a systematic approach to the market. So this webinar is to help them overcome all the wrong perception, and they know that that's actually a systematic way to manage it. And so that you don't become the 95%, you can become the 5% of people who can make it because you are willing to follow the rules. And at the end of the day, they can choose whether it suits them.
Yep.
At least there's an awareness. So I hope people can give a chance to, just listen, and so that they can know there's actually a better way to invest and trade safely, and give them a choice to achieve financial independence.
Fantastic. Thank you very much. If you guys have any questions, please feel free to leave in the comments down below. And do like and subscribe and follow for more if you want more investing or trading or interview contents like this. Alright, Kathlyn, thank you very much. It has been very insightful.